history of banking and history of regulations, uh, it would be proper for me to first talk to you how banking started. You might have Googled also. You can get a lot of information on Google. But relating stories will give you much more insights. So some thing I will try to bring in which will give you some interest. So definition of banks, everyone must be knowing. You all are, you all have bank account, isn't it? So anyone who is without bank account can raise their hand. No one. So that means everyone has a bank account. And why everyone has a bank account? Because you cannot do away with banking. Now, why banking and what is banking? So most of the people think that keeping deposit in bank and doing some financial transactions, sending some remittance, receiving, for students, receiving money in their account from parents, or getting some scholarship created in account is banking. No, that is not banking. When banking started, it started in the form of lending, basically. Someone was having surplus money, someone was in need of money, someone was having need to expand their profession or business or activities, and someone needed to support that activities. That was the real. That's why bankers are normally called lenders. They are not called deposit takers. Subsequently, since it became a profession, lending became a profession, people started borrowing and then lending, and then basically borrowing from someone at a cheaper rate and lending at a higher rate to someone who is needing, and then banking activity expanded. So a bank is a financial institutions. If I tell you the definition that I have noted down for you, that accepts deposits from the public or institutions and makes loans while also creating demand deposits. So what is demand deposit? Demand deposit is which can be returned to the depositor on demand. So there are two types of demand deposits. One we call CA, current account, and the other we call savings bank account, SA. And that's why you might have heard the word these days, CASA, CASA ratio of bank. If CASA ratio is healthy, bank's profitability goes up. Because bank get current account at a no interest, basically they don't pay any interest on their current account holdings. And savings bank, they pay 3.5. In India, it's 3.5, 3% to 3.5%, depending upon banks. Private banks offer some higher rate also. Then, after this activity, lending and then investment also came into picture. Capital market came also into picture. Then investment banks came into basically picture. If you might have heard about the collapse of Lehman Brothers, you might have heard about so many Morgan Stanley and other investment bankers, Chase, JP Morgan Chase. So every bank has an investment activity now. And then they have opened capital market subsidiaries also. So there are so many verticals of bank today, but how it started, how banking evolved. And when banking evolved, whether it was unregulated initially or whether it was regulated from the day one. That is the question that we will going to address. So, banking activity, if you say deposit and acceptance of deposit, wealth management, lending services, payment and settlement nowadays. Now you might be having UPI on your mobile that passes through a payment gateway. That payment gateway may be of bank or maybe of a fintech or maybe of any other intermediaries. But that hits the account two-way. It is hitting your account, debiting your account, and hitting the creating the recipient's account as well. So there are payment. These are payment and settlement. You are issuing check. Someone is receiving that check and depositing in their bank. Then that is cleared through clearing system. Financial services, portfolio management is being offered by banks nowadays, and there is a risk management also. And that risk management has two aspects. One is to protect customers from frauds, from untoward incidents, from hacking, from scheming, phishing, or anything that is happening these days. And also to give confidence to regulators that we are basically having a robust risk management system which protects customers. You might have observed that Reserve Bank of India of late has cancelled the license of many banks, small banks or cooperative banks, because their risk management system or know your customer guidance were not up to the mark. But why banking is important? Why banks are important? It is said that if a country is healthy, a country is progressing well, that shows the banks have supported them. If you see China, their banks are quite doing quite well. If you see USA, their banking system is quite robust and healthy. And of late in India also, you might have observed, despite all NPAs and everything, banking sector has started doing very well. Some cleansing has happened, and economy is also growing that way. So banking activity give boost to economic activity as well. Now, when this banking started, when I will take two parts. One part is universal, global. Other part is India specific. If you see India specific, you will get very few references of banking activity prior to advent of Britishers. We always say State Bank is the oldest bank, having 218 years of age. There were banking activities, but lot many evidences we do not find. We have some references in Manusmriti, we have some references in Mauryan Empire during Chanakya Niti, we have some references. We have some coinage issued by various kingdoms, which proves that coinage system was there, currency was in circulation. Similarly, in the world history, you will find that before 2000 BCE, before Christ, BC, banking history was not available. So the initial history was in Assyria. So if you see the total banking history, if you relate, it will be in Assyria, it was in Sumeria, it was in India, it was in China also, to some extent. People say China or India, since that was one Asian big conglomerate, I should say in current word. So ancient Greece, there was lenders, and Rome also, there were lenders. who also started. After Syria, they started in Italy, they started in Rome, current Italy, I should say. The area was different at that time. And they used to give loans to the needy persons. That is what I say, banking activity was need based. Someone was having money, surplus money, or surplus assets, I should say. Someone was needing something. So, till what was happening in India, I'm making reference because in India, you can relate also. There was a barter system earlier. So people used to exchange grains. Someone was having surplus grains, someone was into fishing, so they exchange. I need fish. I have surplus grains, so I give grains to you. You give fish to me. That was a barter system. Similarly, someone was having gold and someone was having money. So they used to deposit that gold and get that money for doing some business or doing some activity. And when they earn through that, they return back and take back that gold. So this was prevalent in India more because India was always known as golden bird. And here, the temples and the monasteries, they used to be the custodian of gold. So when I come to India, you will find that temples were the first one which started giving loans, which started banking activities actually. It's not kingdom. Kingdom always used to donate. So many scholars trace the historical roots of the modern banking system to medieval and Renaissance Italy. They say Assyria it is started, but actual banking of lending activity started in medieval Italy, Florence, Venice, and Genoa. So the activity of banking started in Rome or Italy. The There was one Bundy and Prerezi family. They were dominating the banking in Italy, basically. And 14th century Florence, they were the family. So it was basically run by a family. And they established branches in many parts of Europe subsequently. The most famous Italian bank was the Medici Bank. So they established branches and termed it as a bank. So Medici Bank was established by Giovanni Medici in 1397. Just imagine, 14th century almost. 1397, Giovanni Medici was a person who established Medici Bank. And then Banca Monte di Passi Siena. Siena is a place in Italy. And when I used to do country risk ratings and bank rating with SBI, when I was in SBI, I used to hear this bank's name. So this bank was the oldest bank, municipal bank. This was a municipal bank, Banca Monte di Passi di Siena, which was established in Siena, and Banca di Napoli. This was established in Napoli. So the date was 1463 and 1472. So these two municipal banks. So in world, if we see come to the modern age, because nothing more is about the ancient period before Christ or after Christ also, we start getting information, we can say in modern age, which is 1400 century, 1500 century. For India, it was Mughal period. And prior to that, it was basically in world, we can say this was the advent of the modern period. So development of banking spread from northern Italy through the Holy Roman Empire. And why? Because the Holy Roman Empire was expanding. Since they were expanding, they were needing money to basically buy arms, buy people also. There were expenses related to expansion, war. So these banks started funding. They look for those funding opportunity. But what was happening that since they were municipal banks, they cannot go beyond a municipal area or area where they were incorporated. So the branches got opened subsequently. And then London became the hub of the banking. You must have heard the name of Rothschild. They were the person who started basically investment banking, and they started funding. And during the World War, they were the most prominent money lender, I should say. So Rothschild also took opportunity subsequently in 18th, 19th century or 19th century, advent of 20th century also, when World War started. So that family started funding wars. They started buying, and how they were funding wars. How can war be funded? So they were buying government bonds and giving money to government. Government is needing money, so they used to get bonds from London market, from European market as well. So development of banking spread from northern Italy, I was telling you, through the Holy Roman Empire in the 15th and 16th century to northern Europe. They further moved. This was followed by a number of important innovations that took place under Dutch government in the 17th century and also in London in the 18th century that I told about Rothschild. During the 20th century, development in telecommunications and computing caused major changes to banks' operations, and banks increases its size and numbers dramatically. The financial crisis of 2007-8, I will come subsequently on that, because that was where regulations came, strict regulations came, where when I discussed, and a lot many changes in regulatory regime happened. So goldsmith started playing important role because they were having gold. So they were taking gold also and giving depositing with the government. You know that currency was issued. Currency is still in India, at least there is a gold standard. So it is basically issued against the gold reserves. Although worldwide it has been abolished, but initially it was gold standard. So the public currency issuance was against gold reserves only. So then goldsmiths, they started uh, basically they started acting as a custodian of gold, and then they started giving government also uh, gold to up their reserves and issue currencies again bond issuance was there. So some hundi or some bond was exchanged with them. In 1695, Bank of England became one of the first banks to issue bank notes. 1695, just remember. So in the 18th century, services offered by banks increased. Clearing facilities, security instruments, checks, drafts, those were introduced. And in 1800, banks clearing house was set up. Now, checks, as I told you, if you issue a check, That check may be of some different bank or some different branch, and to whom you have issued maybe of some different bank. So how the settlement happens? It happens through clearing. So clearing houses were set up and some rules were formulated. That is where your regulations will start coming. I know. When you are issuing bank notes against gold or against something, you make a policy. When you set up a clearing house for settlement, you make a policy for settlement. So those were the days when very archaic regulations were there. The number of banks, I told you, increased substantially, and industrial revolution was the trigger where the need to fund industries was felt. And there, most of the banks started realizing this, that they need to have a cheaper deposits for continue their funding expansion of their funding activities. China, Japan, India, all touched by this development during that period. And in India, although no Indian bank was established before 60s, 1865, it was first General Bank of India, and then it was Bank of Hindustan prior to Imperial Bank. They were there, which collapsed subsequently. But they were in 19th century, not in 18th. So till such time, the branches from London, since we were under British rule, they were operating in India. So if you come to the point of 17th to 19th century, if I say, World War I and World War II, these two triggered major regulatory changes in banking sector. So what happened that during the World War I, Rothschild started buying bonds from London, UK, and giving them money. Russian bloc was separate, German bloc was separate. And in Europe, the bankings were localized. They were lands bank, they were cooperative banks, they were municipal banks. But there was no interconnection or interconnectivity, although they were having some branches, but within their municipality only. So this Rothschild firm or company, they found this opportunity to expand and connected through those banks. So the major funding happened, and after World War, during the World War, you might have heard one Bretton Woods act, basically agreement, which gave rise after World War II, gave rise to the IMF and World Bank, basically. So the regulatory regime, if you see, that started only after World War II, basically. Prior to that, there were very few regulations which were not notarized, that was local, run by local governments, and they were separate. So I think the banking history, if you see, apart from India, the major banks that were active during the 19th and 20th century were in USA, in Europe, in UK also. And subsequently, what has happened that after World War II, strict regulations were enforced, and IMF came into being, and World Bank. Now, I will define World Bank separately. World Bank is not a bank which does commercial activity. It's an international bank for Reconstruction and Development, IBRD. So we call it World Bank, we call it IFC, International Financial Institution also. And they provide loans to countries, sovereigns. Earlier, few investors or investment companies used to provide, as I told you. Now, World Bank started funding activity because they realized that someone may be misleading also, and war can be a costly affair. There were, you will be surprised to know that 1,467 banks collapsed uh, within a span of 4 to 5 months. So that was a serious issue. So International Monetary Fund was set up, which was a regulatory body which give guidance to all the regulators. They give directions. They set up international global standards to follow. And World Bank was funding IFC B loan, IFC A loan, that kind of loan which they were giving for development purposes. Another, if I talk about India, just because when I will be talking about regulatory development worldwide, I think I should first concentrate on the regulatory development worldwide also. And, because when we are talking about world, it will be covering one part. A central bank is the basically monitoring authority for or regulator for all banking activity in any country. So for in India, it is Reserve Bank of India. In USA, it's a Federal Reserve or Singapore Monetary Authority in Singapore. So there are, everyone has, they call it central bank. So in India, I will talk separately when we will talking about history of Indian banking. So this central bank, Reserve Bank or National Bank, somewhere it is called National Bank also. Monetary Authority also, like I say, Singapore Monetary Authority. They are an institution that manages the currency and monetary policy of a country. So they are the regulators. They regulate the flow of currency and they see how monetary policy are implemented. So they fix regulations, they fix rules, they fix certain provisions for operating banks in that particular country. So suppose any Indian bank needs a license to operate in USA, they will have to follow two regulators. One is Reserve Bank. You have to fulfill that regulatory requirement of Reserve Bank, which allows banks to operate outside country. And then you have to follow Federal Reserve. They will be inspecting you. Their norms will have to be followed. So the regulatory regime started. These are the job of the regulators. And with globalization, banking has become very difficult because you have to follow very, very strict regulations of the host country as well as the country from where you are originating. So contrast between a commercial bank and a central bank is that commercial bank does the lending activity to individuals and industries or traders or for services. They are giving to individuals. Companies, central bank cannot lend it to companies. They lend it, but only to the banks. Like in India, you know that reverse repo or repo rate or bank rate. On bank rate, RBI lends to commercial banks.